one of you, almost everybody has completed the course readiness agreement. I think I counted there's only 4 of you who have not. And so again, I'll just say this again. For the first week, at least until Sunday, there's 2 ways that I'm going to track the attendance. And that's by you've either submitted the course readiness agreement, or also you submit your first week's assignments in Connect, which is the Chapter 1 homework and the Chapter 1 quiz. All right, so again, please make sure you do that. And then again, today, like I said, we're going to finish up Chapter 1. In a moment, I'm going to share my screen and I'll get back to that PowerPoint. And I will also look at the Chapter 1 handout. I'll go over that with you. A lot of it is just kind of like an outline, a discussion of some things you need to know, an overview again of the course. And then on Monday next week, we will be getting into Chapter 2. And so there's a couple things. I'll just kind of give you a couple of reminders before we end our session today to make sure you know what you need to be doing by Sunday and also by Monday. So again, there's a lot of stuff I covered on Monday. So before I do my screen share, which I'll get us all back into the PowerPoint, does anybody have any questions or issues? Anything that I can address right now about the class? Again, you all have the ability to unmute your mic, so you can either speak up or you could also just send me a chat. The way my Monday night, I do a Monday night applied accounting live virtual lecture, and lots of times if somebody's talking or asking a question and somebody else has another question, what they were doing is they were just sending me some chat questions, so that way I could just that way you don't interrupt somebody, and I can just I can take the questions one at a time. But if you don't have any questions, one more thing, make sure you do. I did check the Connect registration, and not all of you are registered just yet with Connect. So just as another reminder, please make sure you can do that. You can do it today. Remember, there is a 14-day free trial period, so you don't have to pay for it right away. But the point is you don't want to miss the assignments that are due by Sunday. That's pretty important, because every assignment that you turn in and Connect, whether it's homework or the quiz, remember they're weighted the same points. It's 10 points. You don't want to lose out on those. All right, so. I don't see, I got one chat question. Let me see what we got. About the book, here's the deal on the textbook. Because we are not on campus, and I did not have a textbook actually sent to me, but let me make a note. I will try to get a book ordered that I can put in the library. So let me make a note of that so I don't forget. So what I'll do is I will order a book from my textbook rep and try to get that into the library. Again, I'll check and see what's going on campus in terms of the library hours. I think that was a question from Ubaka. And then somebody asked if, well, here's how you do it. I think whoever, I think it's Christian. Yeah, if you have not gone into Blackboard and completed that course readiness agreement, then make sure you do that. Otherwise, you'll get counted as absent, as non-attending. And here's what happens. So they check after 2 weeks. I think it's 2 weeks. So, after, I think the week of Labor Day. If you have not attended and you've not submitted anything and you get counted as not attending, they actually drop you from the course. And then you have to go through a bunch of stuff to get back in. So it's just a headache. You don't want to have to go through that. So just remember, yeah, if you have not submitted that course readiness agreement, and again, you don't know where it is, just go into Blackboard, you'll find the link. It's right below, I think, the Connect registration instructions link. Just click it. It takes like less than 5 seconds. And that way I know you're here, and that way you get counted as attending. Okay. All right. Anything else? I don't see any other questions coming at me. All right. So I'm going to get into back to the PowerPoint. Let's wrap this up. Hopefully you watched the lecture video. I've already illustrated a lot of this. So I'm going to go through a couple more things just to talk about some of the basic concepts and stuff you need to know about accounting and about this class. what we're going to be doing going forward. And then we'll take a look at the handout. The handout again is a couple more things on kind of like an outline of the chapter, some things I want you to know. And then we'll wrap it up and we'll see if you have any other questions. Usually, I always kind of say 50-50 if I'm going to start chapter 2. I already decided not to rush anything. I'm not going to start chapter 2 today, even if we kind of get done with the concepts a little bit early. I just don't want to push it too hard on you today. This first week, you know, everybody's kind of learning the Zoom, all these meetings. So anyway, so all right, so I'm in the PowerPoint. Let me know if you don't see the PowerPoint right now. It should be on the slide that says Certified Public Accountant. So if you don't see that on your screen, let me know and I'll go back and fix it. Right now it's showing up on my screen as being shared. So again, let me know if you're not seeing it. And so just last time I talked about the concept of a certified public accountant. We talked about some of the careers in accounting. And so just, you know, kind of keep that in mind as you go forward. You know, you're in this is an introductory accounting class. Accounting might be something you might want to consider. There's a lot of jobs out there. There's always a demand for individuals who understand accounting. You don't necessarily have to be an accountant, but it seems like based on the history I've seen since I've been teaching at St. Louis Community College, I get a lot of working professionals, engineers, lawyers, you name it, always coming back to take accounting classes because there's always this communication issue on the job where if you don't understand accounting and you don't understand how to speak the business language, it makes your job very difficult to do. So again, accounting is almost universal. You got to know it. All right, so I'm going to jump into, and I think I talked about Sarbanes-Oxley again. Let me get that slide up. Yeah, just remember the Sarbanes-Oxley Act. It's a fraud act. Essentially, it regulates companies who are trying to deceive the public. And the major thing happened, it was way back, I believe it was 2002 when this act was enacted by Congress. And what happened was, as a company, again, it was Enron, was essentially lying to the public, and all their financial statements were, I don't say everything, but there were some issues on their financial statements that were fraudulent. And the problem wasn't just that, it was twofold. It's that the CPAs that were helping them prepare their financial statements and auditing their financial statements were also in it. They knew about the fraud and they covered it up as well. So typically when you have the oversight people that are lying too, that's a big deal. And so Congress came up with the Sarbanes-Oxley, we call it SOX, and essentially it holds everybody accountable at a publicly traded company. The top people, your top executives, like the CEO and the CFO, they all have to sign off on the financial statements. And if it comes to light that there is any fraud or anything wrong happening, they can be held accountable, even if they don't know about it. And so it's a pretty wide range of authority there that Congress has. And so even if you don't know there's fraud, the rule says you should know about it. And we spent a little bit of time in my Monday evening class talking about this. And I just told them, Google it. If you're interested in finding out about more of the history, just Google Enron, SOX, and you'll get a bunch of hits on Google. And if you want to read about how this was enacted. Regarding this class, it could be a question or two on an exam or a quiz. I don't get into a lot of the details because it's a pretty detailed legal document. But I just want you to be aware of it, that it is involving the fraud, and it's a crackdown again on the corporate fraud. And I would know a little bit about that, but you don't have to study it in depthly. But read about it in your book. There's a couple passages they talk about it. But it was a pretty big deal back in 2002. All right. Now we talked about accounting as we're reporting about business entities. I want to make sure that you guys know the different major forms of business entities. If some of you are taking like Introduction to Business courses, or you've taken other business courses, you probably have heard of some of this. But I'm going to walk you through in a couple minutes the three basic types of entities. And again, you should just know the basic layout because, you know, this is what accounting reports on, or accounting relates to all of these entities. And so, of course, the first one is a partnership.
Which is 2 or more people that are in a business. Am I talking?
I'm sorry, who was that? Does somebody have a question? All right, so you got, I'm sorry, let me start with that. You got sole proprietorship, you've got partnership and corporation. So let me start first with the sole proprietorship. So you all know that a proprietorship is typically owned by one person. All right, so that's the one thing I was talking about, one person who legally owns the business. And I always talk about, you know, if you would like to have your own business, everybody says, yeah, I want to run my own business. I want to be my own boss. I don't want people telling me what to do and so forth. And that's fine. But you also remember that if it's your business, you also have to pay all the bills. You're legally liable for everything. And typically it's a lot of risk. It can also be a lot of reward. But typically, you know, I know some people who have their own businesses, and you talk about work-life balance. These people typically work more than 40 hours a week. I mean, they're almost working just about nonstop just to kind of keep their business going. So, you know, I mean, it's a lot of work, but, you know, accounting does report on these type of entities as well. So again, sole proprietorship, just remember it is one owner, typically, or it could be typically one owner. You could even own your own tax business, since this is an accounting class. You could have your own lawn mowing business. You know, when I was a kid, I grew up mowing lawns, so that was technically a sole proprietorship. All right, a couple things. Again, you're responsible for everything. It's the most risky, again, of all these different forms of entities. It's the most risky because you are personally liable. Now, partnership. I think somebody had chimed in. Partnership is typically owned by 2 or more. And you see this a lot, like if you ever go to the dentist to get your teeth cleaned or get your teeth worked on, typically a lot of dentist offices, they have their partners up with their family. I think my dentist, you always see the last name. It's like you see 3 or 4 names, it's the same. It's a family. Like the dentist has a brother or a son who's in the same business, but you know, dentists, doctors' offices, you know, doctors, they often partner up. Tax firms have partners, and typically you just combine your strengths. The thing about the partnership is, again, it's individually, it's jointly. You share the risk, you share the reward. Most businesses typically start as the sole proprietor, and then you move up to like the partnership, and then in a minute I'll get to the corporation. I mean, if you think about some of the big companies right now, like Amazon and Facebook, they all started off with typically one owner. You know, Mark Zuckerberg was the Facebook guy. Eventually, he became a corporation really not too long ago. And I'll get to that in a minute. You know, Bill Gates with Microsoft, you know, when he started his company, you know, at first it was him, he was the proprietor, and then eventually he moved up, and he's now, of course, it's a pretty large corporation. One thing about the partnership, though, it does end whenever a partner does die. And usually what happens is if a partner withdraws or dies, they always say you close the firm. Usually what happens is there's some sort of succession, and you might have to do some paperwork, and you simply just refile it. And you don't always close the partnership, although sometimes that does happen. But typically you just rename it and then you continue. All right, now the third one, of course, is the corporation. And the corporation, it could be a public or private type of corporation. So like, for example, if you own, let's say you own rental properties, and that was your primary means of income, you could actually become a corporation, which you probably would want to do that. And the reason I say that is because it limits your risk. And that's the whole big thing about corporations, is typically, you know, it limits your risk. And if you're talking about a big publicly traded corporation, like for example, let's say you own stock in Walmart. So you're technically an owner of Walmart if you have a share of stock. The problem, or the good thing about that is if Walmart gets sued or they go bankrupt, the only thing that you lose is your stock investment. They can't come after your personal property. And that's the nice thing, that's the shield you get from the corporation, is that it limits your liability. And whether you're a big corporation like a Microsoft, Facebook, Walmart, or you're what they call it like a limited liability corporation, LLC, a smaller one, it limits your risk. And typically what you want to do, again, if you got your own business, is you want to incorporate, because that way you do limit that risk. And of course, look at in terms of the ownership comparisons. Sole proprietorship is one owner, partnership is two or more, but you could be your own corporation. So it only takes one person to be a corporation. Of course, there could also be thousands of owners, just like there could be thousands of partners as well. All right, but then again, the partnership, typically you might say, well, why do I want to become a corporation? And it's not just for the limit, to limit your risk. Look at Zuckerberg with Facebook. When he went public, it's called going public, when you start to share stock publicly. When he took his company to a public corporation, he became an instant billionaire. I mean, he's probably the top 10, 15 richest persons on the planet. So, there's a little incentive there as to why, he might want to go public. But it's not just that. It's a lot easier to raise money and grow your company much faster if you are a corporation like that, because you can sell stock. And so once you start to sell stock, you have more access to money and capital. Of course, you have all those resources. That's going to allow you to grow and, of course, make more money. I mean, look just how big the Facebook and the Microsoft. Look at Amazon. Look how big some of these companies are. They're huge. All right, so you should know about these entities. I mean, these are always on either the quizzes or the exams. You should know, the differences between the three. Know it's, typically based on ownership, and also know which one is like the most risky and the least risky. All right. Okay. So that's on the entities. One thing I do want to make at this point in terms of tax. So in terms of for accounting purposes, all these are entities, but the only legal entity is the corporation. What I mean by that is the corporation would be taxed, looked at differently as a separate entity. So if you are a partnership or a sole proprietor, when you come to filing taxes or being taxed, you are always taxed at the individual level. They call it like a pass-through. If you have a corporation, the corporation gets taxed as a separate entity, just like you get taxed as an individual. The corporation is the only entity that is a legal separate entity, okay? And I said that because the next slide, they talk about this thing called a separate entity. What's the separate entity assumption? And that's one thing in accounting you need to know. And essentially the separate entity assumption just tells you keep your personal records, your personal financial records separate from the business. So if you own a restaurant, let's say you own a restaurant, that restaurant is going to have its own bank records, just like you have your own personal bank records. You don't mix them. So that your business will be taxed as a business if it's a corporation, just like you'll be taxed as an individual when you file your taxes. So again, the corporation is separate, but this thing called the separate entity assumption in accounting, and the idea there is that you keep your records separate. The owner has a separate record from the business. So know that that's just one business accounting term you need to know. Okay. Next thing, very important, what we're going to be studying a lot this semester is this thing called GAAP, G-A-A-P, Generally Accepted Accounting Principles. You all need to know this. Every chapter starts to build. You'll see, mainly when we get into chapter 5, I'll talk a lot about the GAAP rules and accrual accounting, but these are standards, accounting standards developed by the professional accountants. And when I say the professional accountants, they call that group the FASB group, F-A-S-B. Let me write that one out, just so you can see it. You'll come across this in some of your readings. But yeah, it's called the F-A-S-B. Look it up. It's the Financial Accounting Standards Board, and it's the professional group that develops GAAP. Even though the SEC, the Securities and Exchange Commission, is the top group in accounting, the FASB is essentially appointed to write all the rules, and they change the rules every year. So you can imagine companies that are trading stock publicly, like the Facebooks and the Amazons and the Boeing, they have to also keep up on all these rule changes. If you are an accountant, if you're a CPA, if you're an auditor, you're going to have to know, you're going to have to know all the rules. You're going to have to understand that every year the rules change. FASB, they're always coming out with new announcements, so you're going to have to keep up. That's why with accounting, it's a life learning type of job. You can't just learn something once like a math person and then forget everything, because, you know, with math, I always say that, you know, people wonder about, you know, with accounting and we talk about math, and, you know, I had a colleague, we were talking about this once, and he had a really good analogy. We were like, with math, once you learn that rule, it never changes. You could memorize it, you work it out, you practice it, it's never going to change. In accounting, once you learn that rule, the thing is sometimes that rule changes. So with accounting, you may not have as many rules, but you have all these exceptions. And every year that the FASB develops new GAAP and new exceptions, and you have to keep up on the new rule changes. So it's a constantly evolving in terms of the rules. So GAAP, you know, it's not the GAAP store, it's GAAP in accounting. That's what we call it, GAAP, Generally Accepted Accounting Principles. And again, these are the standards that we follow, very legalistic. All right, now, the last thing I have on my slide is just the auditor's report. And that's just the report that the auditors review when they review the corporation's financial statements. And they come out with they call it an opinion. And they typically say either these financial statements are fair or they're not fair. And it's a pretty big deal. Companies pay a lot of money, several hundreds of thousands of dollars in case for some audits, just to get that opinion from that independent auditor. Because what's supposed to happen is it gives the public trust. So typically, I talked about the CPA designation. You got CPAs that are experts with GAAP. They're watching the companies. The companies' financial people are also experts. We're also trying to make sure that they are following the rules. Once the auditors come up with that report, that statement, they conclude whether the financial statements are good or not. That is a big deal, because if it comes up that there is something wrong with the financial statements, it could hurt the company's stock price. And of course, they're always looking for fraud too. So, you know, some people could be in trouble. There could be fines and so forth if they're not following the GAAP. So it's a pretty big deal. You know, when you're in the world of business, that CPA designation carries a lot of weight. So again, this is again a field you end up going into. You get that CPA, you'll become very.
It's always a
all right, guys. So that's it on that. So hold on. Check something. All right. So let me change my screen, and I'm going to get to that handout. All right. Now, again, guys, let me know if you don't see that handout. I just shared my handout screen. You do have this handout in Blackboard. Just go to the Chapter 1 module, and I downloaded it. Remember, this is practice. This is not for any grade. I think I had somebody already email me. They answered some of the questions, and that was fine. But remember, we're going to go over this right now. So you might want to take some notes, you know, ask questions if there's something that you don't understand. The first 9 of these are objective, and there's a couple more you may have to write some stuff down. A couple of things on here I may not have mentioned just yet, so I'm going to kind of use this handout to wrap up some of the other main themes that I want to make sure I've covered everything I want to cover in Chapter 1. So I'll go through these, and I may also kind of maybe even ask you guys some questions. You can chime in and say whether you think it's true or false, and of course, if you have any questions, let me know. Start with the first one. Purpose of accounting is to provide financial information about an economic or social entity, and everybody should say what, true or false? What do you guys think?
True.
True.
I hear a few people saying true. That's a good one. That should be true. In fact, I think that's what we just talked about. Number 2, an accounting system is designed to accumulate and classify data about a company's financial activities and summarize them in a general journal. True or false?
False.
Why is it false? Who is that just spoke up? All right, well, I got one person who's saying false. Does anybody else have an opinion, true or false? You got a 50-50.
I think it's true.
It should be true.
True?
Plus, yes.
Okay. Any last chance before I go over this question, because some people may be confused on it. Accounting system is designed to accumulate and classify data about a company's financial activities and summarize them in the general journal. So actually, most people are saying true. Well, guys, the answer is actually false. And I didn't talk about this yet, so that's why I wanted to admit, that's why I was asking. I haven't mentioned this concept of a general journal. Technically, what makes this statement false is that it should say they summarize the stuff in the financial statements, the financial reports, not the general journal. Now, you wouldn't necessarily have known that today, but that's why I'm going over this. We will work on the journals when we get to chapter 4. All right, chapter 4 is the journals. And could I ask everybody, unless you have a question or you want to, you have a question for me or you want to speak up, have your mic muted, just in case there's any background noise going on so others cannot hear. But the reason, again, this statement is false is because this should say financial statements or financial reports, not the general journal. All right. But again, we'll get into all the journal stuff in chapter 4. All right. Next question. In a sole proprietorship, the owner is not responsible for the debts of the business that the company is able to pay. And since I just talked about that, everybody should say what?
False.
False.
That's false. Yeah.
False.
They are responsible. Yes. So 3 is false. 4, currently generally accepted accounting principles are developed by the American Institute of Certified Public Accountants. And of course, I think I just gave you the answer on the PowerPoint slide when I wrote something out. Who develops GAAP? Is it the AICPA?
False.
It's false because who develops, anybody know who develops
FSAB.
FSAB.
FASB, you got it, FASB. So that's all you need to know, FASB, so 4 is false. 5, financial statements and the auditor's report must be available to stockholders of a publicly owned company. I'll help you out on that one since I don't think I gave you all the information on that. Typically, that's a true statement. For a publicly traded company, if we're the public, you should have access to not only the financial statements, but also the auditor's report. All right, so that should be true. I'll help you out on that one. All right, 6, you can read that one. That's a long statement. But after you've read it, does that look like that's the definition of accounting?
No.
Yes.
No. Wait, what? Oh, 6.
Number 6, I'm on number 6.
Sorry.
It's true.
That's true.
True.
That's true. That's pretty much word for word the definition. So 6 is true. All right. 7, most owners and managers rely heavily on the accountant's judgment and knowledge when making financial decisions. And again, you have to think about that. Do you think that would be a true statement or a false statement?
True.
Well, who puts together the financial statements? Typically the accountants. Who typically knows something about the financials? The accountants. So yeah, you guys are right. The answer should be true. You typically do, by default, if there's an issue, you might want to go and talk to the accountant, talk to that CPA to give you some information. Now, does that mean that the accountants and the CPAs are always the best decision makers? Of course not. But they do know the rules in terms of what gets reported. All right, 8. Number 8. So what do you think? Should the owner combine his or her financial information with the business?
No.
No.
Correct. That's false. And remember, that is the separate entity assumption. 9's an easy one. A partnership consists of 2 or more owners.
Move.
That's true. A corporation consists of 1 or more owners. If I'd put that one on there, of course, you'd say true as well. Remember, a corporation, you only have to have 1. It's the business partnership is very distinct, has to have 2 or more. All right, now, this one I did not talk about, but let me just mention, when we talk about the concept of independence. So the question is, what determines the independence of a certified public accountant? And what I would write down and think about is independence is essentially, just to summarize it, is that you do not have any financial interest in that entity. so that you have no financial interest. And what I mean by that means you don't have any stock in the company. You don't have any sort of influence over their financial statements. And it's a pretty big deal, because back when they came out with the Sarbanes-Oxley Act, that was the problem, is that the CPAs were not independent. The CPAs were auditing the company, and they were also preparing the financial statements. You can't do that. So they were basically, on one end, auditing it. On the other side, they were basically fixing the books. They had both ends covered, and you just can't have that. So it was pretty crazy how that got to be. But the independence, you cannot have any stock in a company. In fact, you also can't have any, they even look in terms of if you have any family members working at a business. So if, let's say you're auditing Boeing, if you have let's say you have a brother or a sister or a husband who's working at Boeing, that might actually hurt your independence, and you may not be able to actually work on that particular audit if you are not independent. And they look at that very, very closely, just because of the stuff with the fraud. So you got to be independent, and it's basically, you don't have bias. You don't have any sort of interest in that particular entity. So that's what you need to be putting down for number 10. Are there any questions on that one, number 10? Okay. 11, I think I went over this. If not, we'll go back over it. There's 3 areas of accounting that you practice. Does anybody know one of them?
Accounting. Public accounting.
Public is one. You go into public accounting?
Governmental accounting.
Government, you got it. And then the third one?
Management accounting.
Managerial. You know, back when I was a student, there used to be, when I was an accounting major back in the day, and of course, as a student, you're always trying to figure out, you're always looking for that, when are you going to get that job? And our big thing was back in the day was, are you going to go to the public firm? Can everybody please mute their mics right now, because I hear a little bit of background information. Thank you. All right, so in terms of when I was deciding on what to do in accounting, so we were always like, do you want to go public or do you want to go private? And we didn't even really think about government back then, even though government is there's a lot of jobs in the government accounting field. But back in my day, we said, you know, do you go public? They're like, yeah, you're going to work a lot of long hours, but you're going to be promoted and you're going to make a lot of money. You go private, you don't have to work you still work some hours, but back then, the more cool thing was maybe to go private than public. When I say private, that's more the managerial sense. But I think even more today, it's probably more cool to go public, just because in terms of all the benefits, you can work at home, you can travel, they pay for your travel. In fact, it used to be if you are an internal auditor at, like, let's say Boeing, you can make a lot of money, because what happens is they'll send you around the country doing internal audit work, and they pay for your travel. They would pay for all your meals. So basically, you're earning extra money. So you not only have your salary you're earning from them, but you also get what they call a daily per diem, where you get paid a certain amount of money to go out and spend on food. And you know, if you don't spend a lot on food, you still get that per diem. And so I used to have a friend that worked he was an internal auditor at, I think it was Emerson here in St. Louis. And he used to tell me they got a certain amount per diem, and he would travel to, like, Germany to do an audit. And every time he would travel to Germany, he would earn his Christmas money, because he would go live, you know, get a pizza and live on a pizza for a couple of days. He still got, I forget how much the per diem was, you know, international travel. But he always would tell me he'd make a few $1,000s just every time he went to travel. I mean, literally, that's money in his pocket that the company is paying him. So there's some perks to you know, being in some of these areas. So, but yeah, so you got public, managerial, and governmental. All right. Number 12 says, what is the language of business? And hopefully you know that the language of business is, you can fill in the blank there.
Financial information.
It's not financial information. What's
Isn't
the
that
name?
what accounting? Isn't that what that is?
Accounting. Accounting is the language of business. So guys, you know, again, I don't know what your majors are. Some of you might be a business major. Some of you might be something else, hospitality. But let me just tell you that if you are thinking about being a business major, you might want to think about majoring in accounting and not just business administration. And I say that not to downplay the, you need to know business. Everybody needs to know it. If you major in accounting, you get the accounting knowledge and the business knowledge. It overlaps. So it's a better deal. You're much more marketable. My background, by the way, was I had an undergraduate in accounting, and I do have an MBA. So I have a master's in business administration, and I've got my CPA. So I feel like I've got it covered back in the day. You know, I've got the accounting and the business and the CPA. And I've had a lot of former students come through here where they would go to, let's say they go to UMSL and they major in business administration. And guess what happens a few years later? They're back getting their accounting degree, because in terms of the jobs, that's typically where most of the jobs were. And that's what the companies wanted them to know, was the accounting function. Okay. And you might be saying, well, I'm just saying that because I'm an accountant, or that's my background. The answer is no, I'm not telling you that way. I'm telling you that because that's the truth, is that if you want to be more marketable in your field, you want to get that accounting degree. It covers, you're going to take essentially all the courses you would take with business as well. They overlap a lot. The business people don't get all the accounting. So quite often they have to go back and take more accounting later because they don't understand all of it. So it's just something to think about now if you're just getting started, in that, you know, accounting to me should be the preferred major. But again, you know, I've had students that go into finance and you do just well. You can pick and choose and talk about, but you come talk to me, I would say accounting would be the way to go. And then I would say, on a side note, just talking about careers and this thing about language of, you know, accounting, you might even consider getting some sort of either a minor or double major with something with computer technology, like IT or something. You'd be surprised if you have that type of credential going out in the workplace where they say, you know, accounting and you know the computer side as well. That's very desirable. Okay. In fact, they even test on the CPA exam. You have to know, you know, because if you're an auditor, you have to be able to talk with just about anybody in the company, and including the computer software people. And just like accounting is its own language, computers have their own language. You know, I have a sister-in-law and a brother-in-law. They're both computer engineers. And whenever we talk business or accounting, they have no idea. But of course, whenever they talk their type of field, I'm you know, like, what are they talking about in terms of coding? So it's something to think about. All right, last question on here. I know I just talked about this. How do sole proprietorships, partnerships, and corporations differ? And a couple things you might want to put down would be, does anybody have any suggestions before I just kind of give you a couple things? Anybody can think of anything? How do they differ?
Like the definitions, how do they differ from each other?
Yeah, anything. How does a sole proprietorship, a partnership, and a corporation, how do they differ?
Well, sole proprietorship is independent. Partnerships is with two people, so it's not independent. And corporations, I guess, because I'm sorry.
That's pretty close. Does anybody else have anything else they want to add in there? And again, if you can also send me a chat. Let me check. There's a couple chats I missed, and I'm sorry. They were from a previous one. You could put ownership. They all differ by ownership. And I think that's what you were trying to say. You know, sole proprietors, one owner, partnerships, two or more, corporations, 1 or 1,000. So they differ by ownership. They also differ by risk. So remember, the sole proprietorship is the most risky. The partnership, you have shared risk, just like you share the profits, you share the expenses. The corporation is the limited liability. So that's where The corporation is a separate entity, separate taxable entity. If the corporation gets sued, okay, and you guys see that in the news all the time, you know, corporations, they got a lot of money, so there's always lawsuits going on. If a corporation gets sued and loses, and let's say you're an owner of that corporation, they can't get your house, they can't come get your car. They can get the corporation's car and the corporation's properties because that's separate. So that limits your risk. So that's the good thing about the corporation. Okay. All right, guys. So that's the chapter 1 handout. Did anybody have any questions about any of these questions? Anything else? Did I miss something? Did you not get something written down? Was there anything that I need to clarify? Anybody?
I didn't get 1 and 2. I didn't see them.
Number 1 and 2?
Yeah.
Number 1, the purpose of accounting. That's true. That's essentially what we do in accounting. And number 2 is false. So number 1's true. Number 2 is false. And the reason number 2 is false is because it's in the financial reports, not the journal. Okay.
Okay.
Chris has a question.
Yeah, can you go back to the last question, please?
Yeah.
Thank you.
Number 13.
Yes, sir.
Did you have a question on it? Or are you just writing?
No, I just wanted to write it down.
Okay. Now remember, you guys can print this. You guys can get this handout in Blackboard. Just go to Chapter 1 Learning Module, and I've got it downloaded on the Blackboard site. I'll get back to Blackboard here in a minute. Did anybody else have anything else? Guys, that's all the content that I've got really from Chapter 1. I told you it was a light chapter. Really, Chapter 2 is where we're going to start getting into what they call the accounting equation. And again, I'm going to show you a couple things here in a minute. And we got about 8 minutes left, so I'm not even going to try to start Chapter 2 today. But there's a couple things I want to show you to make sure you know what you need to be doing for Monday. But again, I'll leave this up for a few more seconds. But was there anything else? Did anybody have anything else they want to add or ask me? Whether it's about the field of accounting, the career of accounting, about any of the concepts I just talked about. Oh, and I think somebody sent me an email. I think I had mentioned on Monday's class about internships. Typically, here's what I meant by that. This is at my wife's agency. Usually every semester I get a flyer. So I'll get an email announcing if they're looking for interns. And if I get one this semester, which you just, even though we're in this pandemic, I will let you guys know about it. Because lots of times these agencies, they recruit individuals even at the freshman level. And so I believe it was a year ago, they always do it in the fall. And so they were recruiting interns last fall. And I had a couple students, I tried to get them set up. I can't remember what happened, but I just want to make sure that if there's opportunities that do come up, whether it's with internships that I find out, I will try to let you guys know about them. So right now, of course, this is August, still August. I have not seen anything just yet, but my wife, since she works at the agency, they always send her the information if they're looking for interns, and she always sends it to me. So if I get that this semester, I'll definitely send it your way. And again, you don't even have to have an accounting degree. They're just looking for people who are thinking about majoring in accounting. And lots of times what they do is they're trying to get you into the business to teach you their way. And I think, and I think even at the end, the goal is for you to work there. But right now, I don't know of any openings just yet because I haven't seen anything. But I think that's why I had mentioned that on Monday's class, and I think somebody had emailed me asking me about the internships. Like I said, if I find out anything, I always send them to my students first. So that's what that was about. All right. Anything else, guys, on this handout? Are we okay?
Mm-hmm.
All right. So let me go back to Blackboard then. Let's get back into the Blackboard site just a second. Let me get out of this. All right. So here's a couple things. I'm looking at my clock here. I got 6 minutes to go. And essentially, I'm done with Chapter 1. That's all I'm going to talk about with Chapter 1. You need to be going into the Connect assignments. And what I just did was I just clicked the Connect assignment link. The Chapter 1 homework and the Chapter 1 quiz are due by Sunday, August 30th. So make sure you get those in the Connect. Make sure you submit those. Those are 10 points each. Somebody asked about the SmartBook videos. Guys, these are optional. When I added these, they show up in your grade book, but they're worth 0 points. It's an optional thing, but the way I had to create it, they make you enter a point value, so I had to put a point value of 0. If you want more videos other than what I've given you, you can click this SmartBook video and play it if you want, that's fine. Those are produced by the McGraw-Hill company. But by Sunday, you should all make sure you complete the Chapter 1 homework and Chapter 1 quiz. Now, since I said that, also on Monday, we're going to be getting into Chapter 2. So I just went to the learning module. And of course, let me just remember, Chapter 1 module, you do have my Chapter 1 lecture video. You can go back and play that if you want. There's the handout right there that I just went over in your Chapter 1 module. But if I go back to the Chapter 2 module, which is what we're going to be getting into on Monday, again, you know, I've got the overview, the agenda, learning objectives. You'll notice I've got my lecture video, I've got textbook illustrations, and I've got the homework illustration. So starting next week, you see some of these writings where you see, you know, my scribbles. I will do a lot more annotating. We'll probably take some problems. I'll show you how to start to do some analysis with the accounting equation. So in the meantime, I'm going to guess that most of you probably can get Chapter 1 finished before Monday very easily. I am highly recommending that everybody by Monday go in and watch my video. Watch my lecture video. It might take you 20 minutes, 25 minutes. This is the stuff I'm going to be getting into on Monday. It always helps if you've prepared and you have a little bit of knowledge before you come to this session. And that way, when I start to say something, it won't sound like it's brand new. But yeah, we will look at what they call the accounting equation, and it's the fundamental framework in terms of how all the financial statements are put together. I don't want you to lose sight of the fact that, yeah, we need to learn about the financial statements, but before we're going to do that, we're going to build up, we're going to show you how you do the analysis. We will show you how to put together the financial statements. In fact, we'll start doing that as early as Chapter 2. So I would try to watch this video, and you can do this even if you don't even have the textbook yet. You can watch the video before Monday's class. Now, you have PowerPoints. You can open up this zip folder if you want to print out the Chapter 1. In fact, what I would probably do, I would do it once. I would just go in there and I would print all the PowerPoints for every chapter and just use that as your notes. So whenever we're doing like a live virtual lecture session, I would have that PowerPoint in front of you, and then you can jot down a few notes along the way. I think it'll make your note taking a little bit easier. But you got these PowerPoints, you could print those, review the Chapter 2 stuff a little bit before Monday if you can. All right. And once this meeting is over today, just like I did on Monday, you can see this. We've got this, it says Zoom meeting recordings. What I do is I'll convert this, I'll upload it into YouTube, and I'll zap it out here into Blackboard. You'll have access to all your meetings all semester. You just have to go to this link here in Blackboard. And as usual, looks like everybody got in. So remember, I do this class both synchronous and asynchronous. So, you know, I appreciate you guys coming, but, you know, make sure that, you know, even if you do miss a class, I want to make sure you know that you can always get caught up by simply going into Blackboard and clicking on this Zoom meeting recording link. Usually it takes me about a half an hour before they publish it, because even 50 minutes it's not that much memory, but it does take a few minutes for it to go back live for you. All right, I will also send out, after today's meeting, I'll send you out another announcement. Remember, our link is the same Zoom meeting link, but I'll send you out another announcement just to kind of wrap up the things you need to be doing on or before Monday. Does anybody have any questions before I wrap this up? Because I know it's almost 10:50. I know some of you may have an 11 o'clock class. Does anybody have any questions?
Yeah, I have a question.
Yes.
Yeah, for the assignment that is due, now that I don't have the textbook, can I do it with notes and your presentation without having access to the textbook?
Well, when you get access to Connect, you should also have access to the e-text. So you should
Okay.
have it.
Okay.
Does that make sense?
Okay, yes.
So when you do, if you're doing the free trial courtesy access period, you have access to not only the homework assignments and the quiz assignments and the smart book videos, but you also have access to the e-text. Okay. And guys, I can keep talking for a few more minutes. I know some of you, if you need to go, that's fine. I know I'm right at 10:50, but if some of you have a couple more questions, I can stay online here for a couple more minutes if you have anything else. So, but yeah, so that would take care of that one. Is there any other questions though on anything?
I don't have access to the ebook.
Under your free trial access period?
It says,
Usually when you log in there, I think if you see a picture of the textbook, that's how you get into the e-text. In fact, let me show you. In fact, let me log in real quick. I'll go to McGraw-Hill. So guys, if some of you need to leave, that's fine. I understand because I'm at 10:51. All I'm doing right now is I'm going to get into my McGraw-Hill. I'll show you where I get to the e-text if you're wondering how to get to it. But again, officially we're done for today. I'm going to stop recording it right now.